Good morning, dear students. In today's lecture of the subject insurance, I am Ms. Vandana Pai. I will be discussing with you the principles of insurance. Okay. Now, whenever we consider insurance contract, your insurance contract is based on some of the principles. Okay, means whenever you are taking insurance or you are insuring yourself or your property, okay, or any subject matter on which you do have some interest, okay, whenever you are having such type of insurance, at the time you need to, yes, consider some of the principles, or some of the principles, they are very important from this viewpoint. Okay, so whenever we consider the principles of insurance, they are grouped into two parts. Okay, the first part is primary principles and the second part is secondary principle. See, whenever a person approaches the insurance company to have insurance policy, he needs to know, or he is required to keep in mind some of the principles. Yes, see, whenever you approach the insurance company for taking insurance contract or for entering into insurance contract, yes, the insurance officers or the concerned people related to insurance policy or insurance contract, yes, they do alert you to follow some of the rules and regulations, is it? Or if you don't follow some of the rules and regulations into your insurance contract, what will happen? Yes, the insurance company might reject the payment of compensation. This might happen. So if you think that your insurance contract, it should not be broken, or there should not be any break into the insurance contract, yes, you need, if anything happens to your subject matter after you take the insurance policy or in the duration of the insurance contract, yes, the insurance company should readily pay you the amount of compensation. If you think in this way, surely, okay, what you should be doing is, yes, you are required to follow the principles of insurance. Okay, बघा, principles of insurance ला मराठीमध्ये विम्याची तत्वे असं म्हटलं जातं. Okay, so whenever we consider the principles of insurance, yes, they are classified into two parts. First one is primary insurance and the second part is secondary insurance. Okay, now whenever we consider primary insurance, okay, primary principles of insurance, yes, they are further grouped into 5 parts. Okay, which are this? Yes, principle of cooperation, principle of probability, principle of utmost good faith, principle of insurable interest, and principle of indemnity. Okay, see, at the primary level, you are required to keep this 5 principles into viewpoint. Okay, these are the primary principles of insurance. Okay, so one by one we will go through all these principles. Okay, also we will be studying the secondary principles of insurance. Okay, so the first principle which is included in primary principle of insurance is principle of cooperation. Okay, principle of cooperation is oneness, right? Cooperation, what it means? It means oneness. See, in insurance, okay, a social fund is created. See, there are many people who insure their property, who insure their life, okay, who insure the subject matter, right? Okay, there are many people who do take insurance. Okay, now see, many of the time what happens, okay, when it is some of the property insurance or when there is a fire insurance and all, okay, see, whenever we consider the fire insurance, okay, what is the basic duration of fire insurance? Yes, fire insurance is taken for 1 year duration. Now, in that 1 year duration, if your subject matter is destroyed or damaged, or there is event of loss to your subject matter due to fire elements, okay, see, keep that in mind. If due to the fire elements, if your subject matter is affected, destroyed or damaged, yes, then the insurance company, okay, after you fill up the claim form, it does readily provide you the amount of compensation. But in that duration, in that 1 year duration, if your property, that is the subject matter which you have insured under fire insurance policy, if it is not destroyed due to fire elements, or if it is destroyed by another reason, yes, the insurance company will not pay you compensation, the amount of compensation. In such a case, okay, what happens? Okay, see, you have paid the amount of premium, right? You have paid the amount of premium. Does the insurance company gives that amount you back? No. Okay, that amount is not repaid to you. Okay, unless until there is something which is mentioned, or there is any clause or condition which is mentioned into your fire insurance policy. So whenever you consider these things, okay, whenever we consider these things, okay, see, in insurance policy, a fund is created by the insurance company in which all such type of premiums which whatsoever is collected from the insured, okay, they are grouped into a fund, okay, and if anybody, or if the subject matter is destroyed due to the reasons which are specified into the policy documents, yes, the insured does approaches the insurance company. After filling up the claim form, the insurance company is required to pay the amount of compensation. So based on the principle of cooperation, okay, all the people, all the insureds, what they do pay the premium. And what is the role of the insurance company then? Yes, the insurance company collects all the funds together. Is it? A social fund is created, okay, and if anybody, one from the insured, okay, or so few people from the community of insured, they apply for the claim. After, yes, there is any loss to the subject matter, yes, the insurance company, what it does, yes, it utilizes the funds which are created in the social fund. Okay, so this is the principle of cooperation. Second principle is principle of probability. See, we have gone through the term probability into maths, right? Mathematics. Whenever you were studying mathematics, okay, you have gone through this term, probability. Probability, what it means? Yes, it means the chances. Is it? It means the chances. For example, okay, you might have studied probability in sense of coin. Okay, for example, if you toss a coin, okay, what is the result? Okay, whenever you toss a coin, okay, either it will be head or either it will be tail. Is it? Okay, whenever you toss a coin, what are the reasons? The reasons are, yes, it might be head or it might be tail, right? Okay, in the same sense, okay, now whenever the amount of premium, is it? The amount of premium, okay, see, recall, what is premium? Premium is the sum or amount paid by insured to the insurance company for having insurance policy, right? Okay, now whenever the amount of premium is calculated, what are the factors which the insurance company does consider? Yes, see, if the subject matter is destroyed, okay, if the subject matter is destroyed, what will be the amount of loss which the insured will be incurring? Okay, based on this amount of loss, okay, see, if the subject matter is destroyed at most, okay, what will be the amount of loss which the insured is supposed to face? Okay, considering this amount itself, the amount of premium is decided. So here, what is considered? Here it is considered that, okay, the loss will happen. So principle of probability means, okay, the risk which is associated with the subject matter, and okay, the second thing, if the subject matter is completely destroyed, what will be the amount of loss which the insurance company will be facing? Okay, considering this itself in advance, the rate of premium is decided. Yes, and the insured is supposed to pay the amount of premium, because unless until you pay the first premium, okay, or the first installment towards your insurance contract, yes, surely your insurance policy or your insurance contract will never be commencing. Okay, so this is the second principle into primary principle of insurance. The third principle is utmost good faith. Okay, principle of utmost good faith. Okay, what is this? See, whenever you are entering into the insurance contract, yes, whenever you are entering into insurance contract, okay, as an insured, you are required to disclose all the facts related to the subject matter to the insurance company. Yes, what you are required? You are required to share all the information related to subject matter to the insurance company. Means, okay, for example, if you are taking life insurance policy, okay, or if you are entering into life insurance contract, okay, and for example, if you are insuring any of your family person, okay, any of the member of your family, okay, if you are insuring them under life insurance, yes, what you are required to do? Yes, you are required to share all the information related to past of that person to the insurance company. Why? Okay, if you have not revealed some of the facts related to the past of the insured, related to the past of the person on whom you are taking insurance policy to the insurance company, and later in the duration of insurance contract, if the insurance company comes to know that there are few facts from the past of that person which are very important from the insurance contract viewpoint, and you have not shared it with them, okay, what will happen? Yes, the insurance company can break the contract, can breach the contract. Okay, so here what you are required to do? Yes, each party towards the contract, yes, either it might be insured as well as the insurer. Yes, the insurance company is also supposed to disclose all the facts related to the insurance contract, or share all the facts related to the insurance contract to whom? To the insured. Okay, so there should not be any discrepancy, there should not be any fact which is revealed which is important from the insurance contract viewpoint. Okay, so utmost good faith means what? To disclose all the facts, or to yes, share all the facts with the other party towards the insurance contract. Okay, why it is required? Yes, in future if the insurance company comes to know that, okay, there were some facts which are not disclosed by the insurance to the insurance company, yes, readily the insurance company can break the insurance contract. Okay, getting it? Then insurable interest. Okay, insurable interest. What is insurable interest? Insurable interest means interest of the insured into the subject matter. Okay, for example, okay, if or whether the insured is possessive about the subject matter, if the subject matter is affected or hurted, whether the insured, okay, experiences, okay, or whether the insured is also affected, hurted by that event or not. If the insured, okay, if the insured, yes, becomes sad or feels unhappy if the subject matter is destroyed, then surely the insured has the insurable interest into the subject matter. Yes, if there is absence of insurable interest into the subject matter, yes, the insurance company can readily breach the contract. Okay, so what is insurable interest? Insurable interest means interest of the insured in the subject matter. Okay, then principle of indemnity. Principle of indemnity, what is it? Yes, the term indemnity means assurance from the insurer in which he undertakes to put the insured if in the event of loss in the same position that he occupying before happening of the event. Okay, what it means? Okay, principle of indemnity. Indemnity itself means a promise. Okay, a promise given by insurance company to the insured. What is the promise all about? Yes, in the event of loss. Okay, see what is the promise? Yes, in the event of loss. Okay, the subject matter as it was prior to event of loss. Yes, I will be making or converting that subject matter, or what I will be doing is, yes, I will bring the subject matter in the same position as it was. Okay, as it was prior to the event of loss. This is the promise given by whom? By the insurance company to whom? To the insured. Okay, what is the promise? Yes, the promise is that, yes, the subject matter as it was prior to the happening of the event or event of loss, yes, in the same way I will be regenerating it. Okay, what is this? This is the principle of indemnity. Okay, then principle of indemnity, see, it is not applicable to the life insurance. Okay, it is applicable to other types of insurance. Okay, while indemnifying, three methods are used. Okay, to pay the compensation or in the phase of regenerating the event. Okay, the subject matter, the insurance company can use one of the mode which is given in the screen. Okay, first one is in cash. The compensation equal to the loss can be paid in cash. Second thing is repairing. Okay, if there is little difference between the subject matter prior to the event and after event. Okay, what the insurance company might do? Yes, insurance company might repair it. Okay, somewhat it can repair it, and yes, it can regenerate it. Then replacement. Okay, if the insurance company does have contacts with some of the suppliers, okay, what they can do is, yes, they can purchase some of the things or the subject matter from such type of outlet, and they can dispatch it or give it to the insured. Okay, these three modes can be used. Okay, then it is the secondary principle of insurance. Okay, the secondary principles of insurance, they are also classified into 5 parts. So let's see what are the secondary principles of insurance. First principle is doctrine of subrogation. Okay, it means to exercise for own benefit all the rights and remedies which insured possess against the third party. See, okay, once you get compensation, yes, once you get compensation, okay, if the insurance company needs to carry the spare parts or affected parts of the subject matter, yes, as they have paid you the amount of compensation, okay, henceforth you are not legally required to hold those spare parts or the parts of the destroyed subject matter. Yes, as they have paid you the compensation, the amount of compensation, here what you are required to do? You are required to hand over all the necessary rights related to the subject matter to whom? To the insurance company. Okay, this itself is doctrine of subrogation. Yes, doctrine of subrogation means what? Yes, to hand over all the rights related to the subject matter in the favor of the third party, that is the insurance company. Okay, then principle of contribution. Yes, principle of contribution, what it means? For example, if you have insured the same property or the same subject matter with 2 or 3 insurance company, for example in the fire insurance, okay, if you have insured your property, you have insured your factory with 2 or 3 insureds. Okay, and if there is event of loss, okay, and the amount of loss which you have incurred is 1 lakh rupees. Okay, now whether all these 3 insurance company, they will be paying you a separate 1 lakh rupees, that is you will be getting compensation rupees 3 lakhs or what? No. Okay, see, all these 3 companies, they will come together, okay, and they will discuss with one another, and what they will do is, yes, they will share their contribution, and you will be getting the amount of compensation exactly equal to the amount of loss. Okay, if you have, yes, faced, or if you are suffering from 1 lakh rupees of loss, yes, all these 3 companies, what they will do, they will mutually decide their share, and they will contribute as much as the amount of loss. Okay, then principle of causa proxima. Principle of causa proxima, what it means? Yes, principle of causa proxima means the nearest cause of loss. Okay, the nearest cause of loss. For example, when it is fire insurance, yes, the event of loss or the subject matter, it should be, yes, it should be destroyed or damaged only due to fire perils. Okay, it should be damaged only due to fire perils. Okay, getting it? So in the same sense, in your policy document, yes, in your policy document, the insurance company, it does mentions the perils through which your subject matter should be affected. If there is another peril, okay, which is not included or prescribed into your policy document, and due to this, if the subject matter is affected, yes, the insurance company will not pay the amount of compensation. Okay, then principle of mitigation of loss. Principle of mitigation of loss means what? Yes, the insured, when he comes to know that, yes, the event of loss is happening, yes, what he should be doing? Yes, what he should do? Yes, he should be taking the efforts to minimize the loss. Okay, for example, if his subject matter is on fire, if his subject matter is on fire, what he should be doing? Yes, what he should be doing? Yes, he should immediately, yes, contact the fire brigade, or he should take the help of neighbors and friends, okay, till the insurance company approaches, or till the fire brigade approaches the place of event. Okay, he should take the utmost efforts to minimize the loss. Okay, that means principle of mitigation of loss. Okay, attachment of risk. Okay, what is attachment of risk? Attachment of risk means, see, if your property is prone to some of the perils, okay, if it is prone to the perils, then only the insurance company gives you the protection. Okay, for example, okay, if someone, one of your friend, one of your person whom you know, they have taken fire insurance on their property. Okay, so you thought to imitate that person, and you also applied for the fire insurance. Yes, see, the insurance company first, they check, okay, whether your property has risk due to fire perils. Okay, if your property doesn't have risk due to fire perils, then what will happen? Yes, the insurance company will not give you the fire insurance policy. Okay, if the risk is there due to those reasons, okay, then only they will be granting you the policy, whichever is necessary, okay, or whichever you are applying for. Okay, so these are the secondary principles of insurance. Okay, with this we do conclude today's lecture. Thank you.